In order to increase efficiency and productivity, you either probably want to do all of the above, but focus on processes, focus on tools, and focus on skills of your team. Let's start off with processes. You need to have a standard process that everybody follows, which you believe, you meaning the leaders or the organization believes are the best practices in how to increase the chances of winning a deal or getting to renewal, etc.
Hello, everyone. Welcome back to another episode of the SaaS Sales Performance Podcast. Now, we talk a lot here at UHubs about improving productivity and helping revenue teams become more efficient. That's going to be the topic of today's conversation, and delighted to be joined by another excellent guest. In the hot seat today is Roee Hartov. Hey, Roee, thanks for joining us on the show today, and really looking forward to today's conversation on an important topic.
Thanks for having me. Great to be here.
Where are you joining from today, Roee?
I'm based in Berlin, Germany.
Yeah, awesome. Roee, to kind of set the scene, I guess, for today's topic, you and I were discussing off air before coming on about this constant focus, and it feels like we've been through a period of maybe 18 months at least now of, I guess, market correction back in 2022, a shift from growth at all costs into much more ruthless focus on efficiency, productivity, and getting closer at least to profitability. Yeah, I guess a good place to start is perhaps you could add your own thoughts in terms of how we've got here and why productivity and efficiency is such an important topic of conversation for most chief revenue officers in today's market.
As you said, up until the end of 2021, we just came out of the 10-year run that was mostly governed, or at least the last 3 or 4 years of that run was that grow at all costs, meaning let's continue to grow. Our valuations are based mostly on how fast we can grow, not on anything else. And with that in mind, that means that if we want to exit as soon as possible, we just need to grow, if we want to exit at the highest valuation possible, we need to grow as fast as possible. And that usually meant let's hire more people in order for us to scale the business. At all costs kind of mentality. But then end of 2021, I think Docusign shares plummeting 40% is like the watershed event that basically was the beginning of what we're currently experiencing. Money is no longer cheap, and companies are expected in the beginning, first of all, hey, we cannot continue to spend like that. And this is where we saw companies reduce and let people go. 20%, 30%, and usually it was the bottom performers. And it took 18 months, as you said, for a company to stabilize. But now we're back to that mode. Okay, now the investors, the board are still expecting companies. Okay, now you need to go back to that growth mode. However, now you got to do that with less cost spending. And less cost spending means that we need to do more and scale with fewer resources. And fewer resources means that when you look at the individual unit, we need to get more productivity and do it more efficiently while spending less. And that's the focus of basically every company in the market. I don't know, except if you're still doing cyber or AI, you can still have access to a lot of money. But for the rest of us, we need to continue to grow, but do that in an efficient way and focusing on productivity in order for eventually for us to become profitable, right? A profitable organization. And we're expecting that to now happen even before IPO. So traditionally companies were expected to become profitable, let's say at most 2 years after an IPO. It did not happen in the good old days. Now probably you're looking for companies to become profitable before the IPO. And just looking at the recent IPO that happened, let's say OneStream, for example, that went public, I think 2 months ago. Yeah, they were already profitable.
The rules of the game, I think it's fair to say, have changed quite significantly.
Exactly. And all of us, we were all part of that that hype and that growth stage, right? So we all experienced, or we all learned how to operate when, yeah, we had, assuming that we were on the growth path, we had budget to spend. Of course, we were expected to spend that wisely and be successful at it. But now the way we manage and the way we grow has changed. And a lot of us, except for the ones that came out of the com bubble back in the early 2000s, we've never experienced a similar kind of industry. And yeah, so it did change.
From my perspective, Roee, one of the most interesting things I've observed the last 18 months or so has been, as this kind of shakeout has happened, how organizations have responded differently. You know, it felt like there was the very proactive organizations who immediately made aggressive cuts, really reduced their cost base. It feels like there was maybe another cohort of companies who maybe had their head in the sand for a little bit too long and are still kind of on that cost cutting process. It's been fascinating to see how different organizations respond, and then goes without saying that there's been a bit of a bloodbath in terms of turnover in our industry, right?
I would even predict that we haven't seen the worst yet, unfortunately. And what I mean by that, so I like to pull up this number. Back in 2021, according to Deal Room, there were 1,200 private SaaS unicorns out there. So companies before going public had unicorn valuation selling SaaS software. 1,200. Do you know how many public SaaS companies we had at the same time? Talking about Datablock, Snowflake, Atlassian, HubSpot, all these fantastic companies, they were all public companies, SaaS companies. I'll give you, it's 346 companies. So we had 1,200 private unicorns, and we had 346, including the best companies in the world, public unicorns. Now, what happened to all those 1,200? They're still private because only 3 companies IPO'd this year. They're all fantastic companies. They all are generating, to become a unicorn, what? You need 50, 100, most of them even much higher than 100 in ARR. What does that mean for these companies? In the best times, we saw, I think in 2020 or 20, I forgot which year had the highest IPOs, SaaS IPOs, but it was around 60 to 70 IPOs a year. We've got 1,200. We have more right now because companies continue to grow. We've got hundreds of companies that are waiting to do an IPO. Yeah. But they grew at a grow at all cost kind of mentality and operation. And now everybody's trying to figure out how can we become profitable before we do an IPO. And yeah, some of these companies will not be able to go public. Some will get bought by PEs. Some will probably need to close shop. Yes. So some will get bought by Salesforce and Google's and the Microsofts of the world. How much will have a successful exit and how much will basically need to close shop? That's a question mark. And I see that, I predict that a lot of companies, good companies out there, will cease to exist, unfortunately.
Yeah, and I guess that's not even taking into account the current AI disruption or the AI impact that's clearly having on SaaS and that kind of deflationary effects. And that's probably a conversation for a whole nother podcast episode. Yeah. But I guess the other thing we're also seeing is the organizations that don't have enough runway to make it to profitability are taking significant haircuts on their valuation. I saw this week a European TrueLayer who, even despite like having phenomenal growth, taken a 30% reduction on their previous valuation. So that's got to hurt the investors that came in on that previous round.
Last week it was announced that Rapid, formerly known as Rapid AI, this is an Israeli company, they were doing like an AI kind of marketplace. Fantastic companies, fantastic technology, but they were a unicorn. They raised $272 million from SoftBank, Andreessen Horowitz, Microsoft's venture arm. Fantastic companies, right? 272, and they were bought. Last evaluation was unicorn. I forget the exact number, but it was less than what the investors invested in them. They were sold to Nokia for 250 something in cash. This is an example of those fantastic companies, unicorn companies with fantastic products, generating revenue, not generating profit, but generating revenue that we're going to go back and talk about the productivity and efficiency of that. But those companies were not able to probably do that transition. It took them too long. And basically, I don't know in their case specifically, but I'm assuming they ran out of money in order and were just on the shelves waiting for somebody to buy them.
It's difficult, but like you mentioned, not an uncommon scenario that we're seeing in the current market. So I guess, shifting our focus back to the topic of today's conversation, and amidst that backdrop that we've just described, Roee, moving towards productivity and efficiency, help us understand, how would you encourage people to start thinking about solving that productivity and efficiency equation? Like, where's a good place to start based on what you've seen the past couple of years?
Yeah, the way we address this challenge is looking at three things. And this is how we usually tackle this. In order to increase efficiency and productivity, you either probably want to do all of the above, but focus on processes, focus on tools, and focus on skills of your team. Let's start off with processes. You need to have a standard process that everybody follows, which you believe, you meaning the leaders or the organization believes are the best practices in how to increase the chances of winning a deal or getting to renewal, etc. These are the processes that your people need to follow in order to increase their likelihood of succeeding. Also, another thing, when you have processes, you can start measuring. You can repeat those and you can start measuring and continue to improve them over time. This is processes. Every organization needs to have processes in place. We know that when we start off early stage, we don't have processes. We all read the book, The Lean Startup. Basically what it says is like fail fast. You don't need processes in the beginning, but at some point, specifically on a commercial side, you do need to have processes in place. So that's one thing that we like to focus on when trying to increase productivity and basically becoming a better sales team, CS team, whatever we're focusing on. The second thing is tools. Obviously, we know that introducing tools into the process allows you to increase the efficiency, and tools could be a good CRM. It could be a tool to extract data. It could be an even note-taking app that instead of spending 20 minutes to recap your discovery call, it just spits out the keynotes and you can send an email and put it into your CRM in a matter of like 2 to 3 minutes. So that's what we mean tools. As previously brought up, AI is going to really disrupt this area. How will AI, the agents, the different AI tools will allow us to work and become much more efficient? Can we automate? Can we create agents that will take some of the burden in the customer journey from the humans and thereby becoming much more efficient, reducing costs? But this is the tool aspects, and then the skills. Obviously, when we improve the skills of our people, better results and more efficient organization. And that's usually by training and enablement materials and making sure that everybody has the knowledge and the skills to do the job that they were asked to do.
I love it. A really straightforward 3-step process, and I'd love to unpack each of those in a bit more detail, Roee, perhaps starting from the top. So, let's talk process for a minute there. You gave a couple of initial examples. When it comes to improving and building processes, what specifically are you seeing as the most obvious places to begin moving the needle on productivity and efficiency? Is it your overall sales process, or is it like more specific processes inside of the revenue organization?
I would take that to a different angle. It's the approach, and our approach is small incremental changes have a huge compound effect. So it doesn't necessarily, my answer is it's not necessarily in one specific area or combined, but as long as you understand that, let's take the obvious and something that most of our listeners can understand. Let's take win rate. We cannot improve our win rate from 20% to 30% overnight because we introduce a new process. The way to do that is to not slowly, but look at individual moments that matter and improve them over time. And that means, and of course, we're talking about change management here and changing human behaviors. We need to focus on small changes. And some of the things seem obvious, but not all our salespeople follow that. For example, when we close a call, do we do a summary, define clear action items, and schedule the next meeting? Seems obvious, seems easy, but not all salespeople do that. That's an easy thing to get right, to have our sales rep start to implement. And we know that will solve the ghosting issue that we all experience, right? What's the next step? We've all been there, like a deal review kind of process. What's the next steps? I haven't scheduled that yet. It's going to be a demo, but it's not in the calendars yet. And now you're chasing the prospect, right? So these small incremental changes have a compound effect. And this is how we like to see and focus on improving processes.
Got it. So it's the incremental impact of lots of smaller improvements rather than one big thing. I mean, I quite often hear, particularly where, say, a new chief revenue officer has come into a role, I quite often hear the feedback that we don't have a sales process. And it's amazing, companies in the tens of millions of revenue, but the new CRO comes in to discover that there's really no structured way to take prospects from point A to point B.
Yeah, we hear it a lot. Usually companies that were very successful when they have a very successful product. But when you have a really good product, you can find yourself, going into that tens of millions in ARR without having a sales process. We've had that back in 2020, 2021. A lot of companies were like, hey, we've reached 100 million in ARR. We don't have our process now. We just closed our last funding round and we need to double our headcount. But in order to do that, we need to have a process in place. This is what we usually did in 2020 and 2021. Nowadays, probably because the market changed, we don't hear that as much, or I would say at all. I don't remember the last time we did a project like that. It's usually the smaller companies that have reached a few million in ARR and like, all right, now we need to have a process in place.
You spoke also, Roee, about the importance of process and helping you measure what's working and measure what perhaps isn't working as well. We see lots of processes in organizations being run, manually in spreadsheets and kind of lacking in accountability, question marks over adoption. What are some things that you see work well? If I'm a CRO who's looking to tighten up and improve my processes to drive these incremental benefits you spoke about, are there any kind of best practices that you're seeing work really well in the market today when it comes to improving and building processes?
We like to focus on implementing a data model. And I would say usually I get asked, like, when's the right time to introduce a data model? 10 million.
And for the listeners unfamiliar with the data model, could you double click on data model and help us understand more?
Yeah, Winning by Design has developed a model that allows you to basically structure the customer journey into different stages that you can measure. We call it the bowtie, and you can measure the progress along the customer journey. The bowtie is the model that we designed. However, companies out there do develop their own data model based on their unique customer journey. It's just that sometimes they don't altogether. You just talked about that. They don't have a data model. They don't measure things. And that's, if you don't measure things, how can you improve? Like, you just make assumptions and work based on gut feeling. So this is the thing that, hey, have a data model. Start measuring. Measuring, you probably want to start off with the easy ones. We call them like the volume metrics. How many MQLs are converting to SQL, that are converting to opportunities, that are converting into customers, that are converting into paying customer or live customers, that are converting to renewals. So start measuring that. And you can go even deeper than that. Let's say the sales process. We know we want to measure the conversion rate, the success rate of the discovery meeting, the demo meeting, the proposal meeting, etc., etc. So we want to measure all these steps. We want to measure the conversion. So what is the success rate from a discovery meeting to a demo meeting? For example, if we see that our numbers are dropping, what is the reason for that? If we see, let's bring it back to the productivity and efficiency. One team has a success rate at a high number and the other team has a low number. Why is that? What is the difference? Is it a skill issue that we need to address? Is this a process issue? We don't have a process. Everybody's doing their own thing. Yeah, so that's how you start to uncover how do you improve or what type of processes you need to have in place.
We've seen lots of customers as well, Rory, the last 12, 18 months has in particular evolve ICP. So I'm imagining that once you have that established data model, the benchmarks or the expectation of what those numbers should look like has to change and has to keep up, right?
Yeah, this is something that you constantly need to measure, and you can measure to yourself. So what is the trend compared to the previous quarters? Are certain numbers going up and going down? Why is that? What did we change? Sometimes numbers going up is a good thing, but sometimes it's not necessarily a good thing. For example, if all of a sudden marketing has changed their marketing strategy or their scoring and filtering, we get a lot of new MQLs. So higher MQL numbers do not necessarily mean that things are going the right way, because we know that the quality must drop. So yeah, measuring along the customer journey will allow you to identify what is working well and measuring that on a consistent, ongoing basis.
Do you see leadership teams in today's market, Rowie, guilty of trying to do too much at once?
It's always a problem, isn't it? That's what we're expected to do. And I get that. Like, I don't see that. I don't know. What's your perspective? I don't see that as especially early on, you try out different things. You're expected to try it. I don't know that you just mentioned ICP. I didn't know if the right ICP that we originally thought of is the right ICP. ICP always evolve over. At some point, you need to focus, and this is where the investors tell us, fantastic, you're doing a lot of things, but you need to focus. So you just need to sell to that segment. So I don't know what the point is, but usually finding that go-to-market fit requires you to focus a bit your resources.
I'd agree with that. And I think the big learning, I think, for lots of founders as well as revenue leadership teams has been like the fact that product market fit is a moving target. It's not like you get it and you've got it for life. And we've seen obviously some pretty high profile cases of that in the last couple of years. But yeah, sitting down with CROs, you quite often talk about sales velocity metrics, and they'll say, yeah, we want to move the needle on all of them.
I just want to say a lot of companies have lost their go-to-market fit. The ICP changed. It changed because money is no longer cheap. After what we all experienced in the last 18, 24 months is that companies stopped buying. I don't know if you guys did this exercise, but even in Winning by Design, we did this exercise. Let's look at how many SaaS subscriptions do we have? Do we really need 100 premium seats in this CRM, or can we cut it down to just for the marketing team, them getting that premium access and the sales team getting the sales premium seats, etc.? We've all done that. And a lot of the companies out there did have a change in ICP. That's our industry change. This is a natural thing that happened.
Yeah, completely. And to give you like a first person experience of that, having built a SaaS company the last 5 years, where we were a seed stage company going to market in 2021. Our vision was to create this analytics plugin to Salesforce to visualize skills, and the feedback we were getting from the market was that's really cool, but right now and the ICP was seed to Series B software companies. So the feedback we kept getting was that's cool, but right now I've got to onboard like 10 salespeople a month. So we pivoted and we went back to the team. We're like, shit, we can't get traction with this thing. So we built a different product to begin with. And then, it was for that ICP where they didn't have as many resources to ramp up new sales hires. So we just built a really easy way for them to do that. You get product market fit with that ICP during that period. But then, as we talked about at the beginning of the show, funding dried up. Lots of those companies went bust because they couldn't raise their next round, and hiring just turned off overnight. So then we had to go through this period of rediscovering ICP, but then go to market fit and product market fit. So yeah, it's a moving target for sure. The second pillar that you spoke about was then tools. Again, we won't spend too much time here, Rory, because again, I think this could be an episode in itself. AI is obviously having a huge impact on tech stack. There's a lot of noise in the market today when it comes to understanding where you should invest. You gave an example of using AI to transcribe calls and drive efficiencies. Are you seeing tools and automation mostly for the productivity side of things here? Where are you seeing most impact?
Not seeing impact yet. I think we're too early to say we're seeing impact. I'll tell you what I believe potentially has the biggest impact. I just love the AI coaching solutions out there. I think there are some very good ones that you can actually rehearse And we've seen, most of us probably have seen like SDR doing like the call calling with an AI agent and getting used to getting those objections and getting smacked down. But that's great. Like, let's take that. For those of you who are using Gong has some fantastic AI solutions in there analyzing the calls, allowing you to extract insights. I believe that Gong is in the right place to disrupt the normal or the classical CRM that we have. Taking unstructured data from the calls, combining that with structured data from Salesforce, and then allowing you, the manager, to better forecast, to better understand where your deals are based on actual conversation and not what the sales rep told you because she believes that she's happy ears or everything else that we constantly hear. So it's about trainings, it's about that. There's an entire conversation. Let's look at, I don't want to call it PLG, product-led growth, but let's call it self-serve kind of customer journeys where you don't need a salesperson involved. At some point, companies or at a certain amount, you cannot do self onboarding and you cannot put a credit card in order for somebody like you're selling to I don't know what's the threshold, maybe a mid market kind of company. You need a PO, you need a human in order to buy that or the buyer expects to talk to a human before they commit to spending 20K a year, so they need to talk to a human. There's probably legal review, etc. I believe that with AI, we'll be able to go up market with self-serve kind of customer journeys. So if we're talking, for example, doing a demo, right now, self-serve kind of demos are usually videos or those cool tools that show you, hey, click here, and they move the mouse for you and show you what you need to do. I believe with AI, it will be able to open new segments that will be willing to take that self-serve journey with us.
What do you think the ceiling is on deal size for that though, Rory? Can you see, can you see buyers spending 20 grand without speaking to a human?
I don't know, but I don't think it will happen overnight. Maybe you will speak to a human after you did a self-serve discovery, self-serve demo, and just like the proposal, you talk to a human just to create that in the first step. And then at some point, maybe, yeah, we will feel comfortable buying from from AIs, and that step will also not be required. So I don't think it will happen overnight, but I just think it's going to be, yeah, let's do a discovery with the AI. I don't need somebody to talk to me about the weather and yeah, I just want facts. Just want, hey, what's your product doing?
Yeah.
I want to ask the question. So yeah, I believe it's gradually going to happen.
I definitely agree with that gradual process. It's going to be interesting to see what that kind of upper threshold is and whether you can do a full cycle sale without human involvement. And I'm also thinking about the first point, tying it back to the process improvements and the data model. What are the impacts going to be on those metrics? Because I'm sure you'll have a lot more predictability from disco and demo stage if you've got this literally an identical process being run by non-humans.
I'm so excited about what Gong is doing in their forecasting. They do forecasting based on the triggers that they have in their system. I believe that the challenge that we all have in order, like, how do we do proper forecasting, will get solved by AI. That's one of the areas that is ready to be ripe, and yeah, it's going to be addressed, I assume, with AI quite soon. Imagine you look at the firmographics of the company, you compare that to your existing customers. Are your existing customers similar to that prospect? Yes, they probably have the same buying, they probably have the same needs, same critical events. It's easy for you to do that with AI. And now just add to that, let's have a discovery call review. Are they hitting the point? Did the seller hit the point? Did they talk about the same pain points? Do we know that these are successful ICPs, successful companies that we were able to address? And this is usually their buying cycle or buying process? Yeah. Then the AI can say, hey, this seems like a good or a prospect that is highly to convert into paying customers.
A really good segue for us to come onto the third pillar and unpack skills a little bit, because I can't help thinking then, if we're headed into this future world where AI agents are going to be driving a lot more of the sales process, there is an opportunity for us to move much more to a self-serve model. Surely then that has an efficiency effect on the number of salespeople that you need. And therefore, the types of skills, are we moving towards a world where we have smaller revenue teams from a headcount perspective, but they have a requirement to be much more highly skilled in specific skill areas?
I think so, but something that is maybe a bit more obvious, SDRs. So right now, all of the outreach and mix match are integrating AI to help personalize messages using Clay and Zoom info, all those type of enrichment that allows you to create those personalized outreach messages. But you still have the SDR that needs to press the button, but it's highly personalized. Yeah. So the next step is you don't need the SDR to press the button. So to your question, what is the role of an SDR? I've seen sales agents that do cold outreach. The question is whether you want to talk to a robot or not. Let's put that aside. Once you cover that, why do you need like a team of 20 SDRs? Just have 5 that are behind the keyboard that just manage all this and sync. And to your question, you need a different skill set. And let's look at the sales process. CS is also obvious, right? CS's role is to prove impact. Can we do that through an AI and a robot? Probably. To what extent do you still have those QBRs, etc.? It's a good question. Yeah, I think that's the path we're heading. To what extent, how quickly?
It's the journey that lots of our customers have been on the last couple of years, where he has definitely been around sort of reskilling as well. So I think a lot of leadership teams have figured out that the skills and capabilities they had in the old world with the old ICP or the old process aren't necessarily the ones that are going to allow them to execute against the target moving forwards. What are some observations or perhaps best practices you've seen when it comes to the skill development side of things?
Yeah, I would want to start off with a provocative answer here. I don't think it's reskilling. What we usually see is upskilling. Again, when everybody was buying from everybody, it was easy to sell, especially if you had an attractive product. Everybody was willing to try out different softwares and solutions out there. But now it's a different market. The sellers that learned how to sell between 2018 to that 2021, 2022 are different. Yeah, we all know that everybody was hiring you in order to fill the ranks. You probably went and hired less experienced people. And now you have those people. They might have been successful, but now you need to upskill them to sell in a different market condition. And the way we usually like to look at it when we come and help, right? One of our practices is also training. We like to focus, and we're talking about big companies. When big companies have hundreds of reps or tens of reps, we usually break it down. And this is what you usually see. You've got the top performers. These are usually, and let's take the sales team because that's an obvious. You have sales targets. You usually have that 20%, really changes, could be 5%, but that top performers, these are people that have reached 100% or above of their targets. The big mass is usually in the middle. Let's say that's the 40%, that's the 50%. Those people that are constantly hitting between 50 to 100% of their targets. And then you've got the bottom performers. That unfortunately, recently that group has changed. Usually, traditionally, we saw that 20 to 30%. Now it's 40 to 50%. So that group has increased in size. But these are the people and the reps that hit less than 50% of their targets. Now, when we come in and try to focus on upskilling, we usually focus on that 40%, that group in the middle. And why is that? Because don't mind the top performers. They're doing great. In a lot of cases, yeah, they know what they need to do. In some cases, they always know what to do. They're hitting their targets. In some cases, they're not willing to change, but that's fine as long as they're hitting their targets. The bottom performers, on the other hand, in order to upskill them, you need to spend a lot of resources in order to upskill them. And where you'll get best ROI is to focus on that middle tier and get those middle normal performers into that top performers. And that's where you're going to get more for every dollar you invest in them.
Yeah, I totally back that up, Roee. The frozen middle is where the most ROI tends to come from in our experience. And one other piece I will add to that, though, is the kind of top 40% or the high performers, the A players. We definitely see that, in terms of even when we're running diagnostics, it's like, yeah, hey, I'm great, get out my way. But we have seen across quite a few customers like atrophy in those A players. So actually, it's not like, how do you detect those leading indicators of high performers that maybe are on the decline and need a bit of an adrenaline shot in the arm and need some of that upskilling.
What you're describing is in a lot of cases a motivation issue. And that's a different ballgame, right? Like, how do you continue to motivate your AA players before they move on? Just to an increase in 10% in their OT. So that's a different conversation. Assuming, that it's not a skills issue.
Yeah, will versus skill. Roee, this has been an awesome conversation. So we've really dug deep into productivity and efficiency. We've broken it down into process, tools, and skills, and it's a fantastic way to think about solving that problem and that equation. For listeners of the show who would like to continue the conversation, reach out to yourself with further questions. I'm assuming LinkedIn's a good place to do that.
LinkedIn is best, and we're always open. So reach out if you have any questions regarding what we said or some of the models that we talked about, the data model, etc. Be happy to share more information there.
Roee, it's a pleasure as always, and really good hanging out with you today on the show.
Thank you for having me. It's been a pleasure.